Okay, I'm going to be talking about gold in less than 3 to 10 minutes. So watch this video. It's very, very important that I talk about gold. I love gold and love trading gold, but as it stands right now, we're in a very critical position. So let me start probably from the monthly time frame. From the monthly time frame, the month just started 3 days ago, and as you can see, gold is seriously what bearish. In just 2 days, the gold has lost about from 1968 to 1935. That's about 68. That's 330 pips to the downside. So what is happening? We need to be very, very curious and ask questions. Are we coming back all the way down to, you know, all the way down to these areas, to this? Hold on. Okay, probably should I take all these things off? Let me take them off first. So I'll try to be very, very fast, very, very fast. So we have previous area of resistance around here. Are we driving this market down and coming back to these areas? I guess in this 1600 area, we're about to find out. I guess in it for good. So whatever is happening right now, this is a monthly. So if I check at the monthly, um, we're currently having a divergence to the downside. The buying pressure is fading away. So I will not use a monthly to judge. I'm just showing you what I have on the monthly. So let me go to the weekly and watch this very, very fast on the weekly. If I should go back, hold on. On the weekly, we are oversold on the weekly already. I guess we were bought on the weekly, sorry. So about are we coming back and finding a way to go back up? I don't know. And I just flow the market. So whatever is happening, I combine, markets, technical analysis, and every other thing to find out whatever is happening. So on the weekly right now, whatever I can see, the market is bearish on the weekly. Yes, the market is bearish on the weekly. So um, is this a move to the downside? Or whatever I see, this was the previous resistance, and the market tried to break above or couldn't break. So whatever I'm saying right now is a resistance, previous resistance. So is this a continuation to the downside, a comeback to support levels? I think so. So whatever we're having right now, we should very, 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 that's why it's good to do a multi-time frame analysis before you trade. So this is what we have right now. So whatever I'm saying right now is that weekly is bearish. And if the weekly is bearish, the only support I can see on the weekly is these areas. I get me. So if you find resistance on the weekly and you are trading down on the weekly, I think you need to be very, very vigilant whatever you're doing. So as a stand, I'll go down probably to the daily and show whatever is happening. And if I should show you whatever is happening in the weekly, this was a break of structure to the upside. Yes, and so um, why I'm doing this just good analysis is because it's very, very important. Because if there's a break of structure to the downside, that means that this was a retracement, and it it was actually a retracement until whatever I'm seeing happening right now, because the dollar itself is bullish and we did a reversal to 0.618 retracement level. Well, it's trying to do something. Why? That's why I'm doing just this good analysis. And what did it do? Let's go to the four chart so that it will be clearer. What it did was, fight in between these you know, um, falling wedge to 0.5, 0.618 kill zone and did a switch back to the upside, then come back to this, particular resistance previous. So I'm just going to drive it perfectly well so that we not get carried away. I get me perfectly well. And where we are right now is very, very important. So let me show you something. Let me show you something real quick. So since we came back to 0.618 and retraced to the upside, we actually left a lot of confluences for us to follow. So this was the previous resistance zone. follow up. This was a previous resistance zone, and this was the previous support levels we had. Where we are right now, this was a previous support level. So we did a fake out to the downside. Not let me not call it a fake out. We retraced to 0.618. That's if you are a support and resistance trader, you would have been caught out of this, price action pattern that happened that 0.5, 0.618 Q zone. So we were able to buy back into that Q zone, but we found resistance again, and which this market was supposed to break to the upside, so that when we're coming back to retrace to this downside, I know that I'm safe. But we did not do a retracement. So whatever is happening right now, what are the fundamentals going to do in this case scenario? This place is very important right now. We are not supposed to break down again. Are you getting it? Because if this was a bullish case scenario, look at follow up. If this is a bullish market, let me show you something now. It's supposed to just complete this head and shoulders pattern. Are you getting it? Don't break this. Reclaim and continue going. Now, hold on. If we can do a head and shoulders pattern, we'll come back. Definitely we'll come and break and continue to the upside, because we have, the more touches on a particular resistance, the more it will break. The more touches on a particular support, the more it will break. So which is going to prevail? I'm going to show you right now which is going to prevail right now. So let's test this and show you whatever is happening here. We're at 0.5, 0.618 already. I guess. But don't forget what is happening on the weekly. Remember, on the weekly, it wants to really go down. It really wants to go down. But this particular area right now is a very, very crucial area, because it's a major area of value where we had previous support, turn resistance. I don't want to see it break again. It happened here on the lower time frame. We broke and recovered. I really don't love those fake outs, but whatever it wants to do, let it do so. I'll bring back my Fibonacci retracement levels. Why we should not lose 0.5, 0.61 is so that it will not throw out, the sentiment of the bulls. So whatever is happening right now, if you can zoom out, I don't want this video to be long, but it's important that I talk about this particular area of value where we are right now. So watch out. This is a Q zone, a retracement zone. So I'm expecting, according to my strategy, I'm expecting a bullish reversal sharp pattern in this Q zone. Even though he wants to do it in next week, no problem. But just consolidate for me for here. Form a double bottom, like what gold does, W pattern, break to the upside, retest and continue going. Now let me show you something else why I drew that professionally. Now look at, I want something like this to happen on gold. So I don't want to remove the Fibonacci tools. I guess I would have removed it. 0.5 is half. I get it. So we've broken down to 0.5 right now, but we'll have a last result of 0.618, which is $129, $130 area. I get it. I want to see some, bullish price actions, bullish candlestick patterns. I get it. I want this market to probably come to 130 and find probably hammer or any other thing, anything you can find. Just start giving me all those bullish signs. Even though you come to this area, give me a bullish engulfing. Anything you can give to me around this area that you get it, then form a lower time for probably a 1 hour sharp pattern for me to see again. But normally I'm not supposed to buy until something happens. And what is the thing? I guess it's either I'll see a short pattern forming or I see a consolidation happening, but you are not supposed to buy until this particular concept happened. And what is it? This was a previous support that we broke with this. I get it. Just try and recover it. Break back into that support. I guess in previous support, turn it back into support again. Then I can start buying conservatively. So these are my two areas I want to buy from. These two areas, I guess, and buy from these two areas. buy from this particular skill zone or buy from 1940, $1945 area to continue this market to the upside. So I'm looking for this to buy back. So wash out, recover this, I guess, and break back into it. You can start buying again. Then recover it, recover that support. Then you can start buying again. Put your stop loss below here. I guess, and or coming into this kill zone, just find something like a W pattern, anything that you can find, break, change character back to the upside. We test that broken structure. Are you getting it? We test that broken structure, then you can start buying from this area to the upside. Are you getting it? Because this will even assist in breaking this structure, changing its character to the upside again. Breaking that structure to the upside, we're testing this particular part and going to the upside. These are the only scenarios I want to find before trading this particular goal structure. And I'm not leaving the 4-hourly structure. I don't want to go to the 1-hourly structure or the 15-minute structure, and it's giving me a heads up and a buy, and at the end of the day, doing what it did with ADP and non-farm payroll to the ADP, what's it called? The jobs that was added to the US economy, 324,000 jobs already. So this is what I want to see. If you do this, you have patience to wait for structures and price action to happen. Trust me, you will lose less. You will lose less. Are you getting it? Because you can't do these two things. First of all, you've taken this liquidity, I traded this liquidity that it did, I guess, in your traders liquidity, which as you know right now, I should take this off and drive this market for you. You see that this market actually did what? I switched to the downside because this was actually the last high we had. Then we came down, we came up again, we broke. Immediately we broke. This is a change of what? Character to the downside. So we switched the market to the downside here. So I want to see another switch to the upside again. So I want to see a change of character to the upside again. After seeing that structure, we broke again, confirming the trend change to the downside. So this is another break of structure that has happened again because this was first change of character to the downside. We came back to the supply zone. We found supply. Came back to the supply zone. We found supply, which has broken this market again to the downside. So this is another break of structure that's happened here. Are you getting? So once you recover that particular structure you've broken, I am not buying. Or show me something around here before I start buying. Because if truly that this was a retracement to the downside only, so if I should go to the higher time frame, if truly that this was a break of structure, are you getting it? And this was just a retracement to 0.5, 0.618 Q zone. This market is supposed to do what? Recover here and continue doing what? Go to the upside. So I still have more upside to go. Are you getting it? So I will not get carried away because of just 1935 to 1945, 100 pips that I want to cash and go and lose money. So I still have more upside to go. So watch your trade very well. If this trade must continue to the upside like this, I guess, and if this trade must continue and go to the upside, where we are right now is the most important part in this particular gold market as it stands right now. So don't get carried away. Stay in your lower time frame. Follow market structure. I guess in it, follow market structure, and we see that you will not make many mistakes because confluences are there to help you. First of all, the 0.5, 0.618 was 0.5 was half, that's equilibrium, is a very important area of value that we don't need to break to the downside. Even though we break to the downside, are you guessing it? We still have 0.618, which is 1,900 area. The moment we are breaking this to the downside, again, breaking bigger higher time frame structures, know that the market is in a deep mess. So before that, for me, I don't want to see, for me, I don't want to see this particular structure break. So if I should go to the higher time frame and show you something why I don't want to see that particular place break is because if I should take this off, is because one, this was a falling wedge which broke to the upside. will find resistance. I guess it's not supposed to find resistance. Let's break it a little bit. One, we retrace from 0.5, 0.618 Q zone. We reclaimed a broken structure. Are you getting it? That's two. We reclaimed a broken structure. We did a W pattern on the 4-hourly chart break. So this is supposed to be a break and retest. They continue. So whatever is happening here right now, if you measure whatever is happening here right now, this is the area we must not lose. 0.5 to 0.618 Q zone. We must not lose this area right now. The moment we are losing this area, just know that bears might take control and take this market to the downside. And continue doing what? Switching to the downside. So wait for a price action pattern or wait for how many things that you should wait for. Wait for a price action pattern within this area to the upside, or wait for this market to recover this particular broken structure which it did today, the second, then you can start buying again. I guess in so because you still have about how many thousand pips to the upside, 700 pips to the upside to 2050 all-time high again. Because the moment we break this, we'll continue doing what? Continue trying to the upside back to 9080 support. And the moment we're breaking above that 9080 support with the last confluence waiting for, which is a head and shoulders pattern. I guess in it, break and retest. That's another market trading us to the upside to a new all-time high. So if I put the extension of this phase, this next phase, you see that we're coming all the way back to our previous high. So this is what I want to see. These are I drive my market. If you have any questions, you can write me personally and I'll be obliged to answer you. Take care and bye for now. Bye.